Hey everyone, Marty Missouri. Good morning, January 12th, 2019. Just going to keep you a few minutes this morning. For those of you who are watching this market day in and day out and paying attention to all the volatility, I want to kind of set your expectations for the next few days, if not weeks. And it's really all about 2600 on the S&P 500. Now we're having a technical discussion. 2600 has obviously no fundamental importance. Boy, does it have technical importance over the last year or so. Here's the S&P 500 with that really nice 2017 rally. Ran into some resistance right here in November at 2600. Came down, traded noticeably lower for a few weeks, then came back up, struggled with it again, came through it, found support there, tested that support, and then we were off to the races and had a really good run right up to January 26th before the market fell apart and had a real quick 10% correction. Notice that we came barreling through 2600, found a little support right here at about 2550, and then came up and then began establishing 2800, which will be a conversation I suspect we'll be having in the not too distant future. Then resisted that, came down. Notice this 2600 level was support, support all the way through here. Tested that support and then set a nice several month upward trend line, little resistance and then support again at 2800, and then finally peaked, and all the stuff we were talking about on the blog just kind of came to a head. And then we came down, played with that 2800 level, of course, and tested it, then came down. Lo and behold, 2600, that old support, held very nicely, came back up, struggled with the 2800, came down, looked like we had our, the makings of our W pattern, but technicians would identify that as a triple top, which is a bearish sign. And of course, we talked right in here about what was going on around the trade talks with China, the arrest of the Huawei CFO, and so forth. Market was not going to hold up against all that. Came down, tried to hold up at 2600, started to come out of it, reason to get optimistic in here. And again, for all of those factors that we talked about on the blog, the market came barreling down. 2600 is going to be a real test. I could see the market selling off of here and gaining some momentum with folks who really think we need to test that bottom. And that could be a technical catalyst to get us to come close to testing this again. Now, if that doesn't happen, let's say we get better than expected earnings news. It is earnings season, and earnings expectations have been ratcheted way lower. So the bar has been lowered dramatically. And interestingly, typically, when you come into an earnings season with earnings expectations being ratcheted down so low, you tend to actually have a pretty good time in the stock market. Of course, there's a lot going on today. Government shutdowns and the trade issues and so forth. So we don't know, of course, what's going to happen, but there's lots and lots of room and reason for volatility. But if we get some good news, maybe it'd be good news on trade, and we come barreling through there, and it looks like this is going to become support again. Make no mistake, there is a lot of short interest right on and above that line. If those folks who have shorted believe that their stocks are going to race above the levels where they shorted them, they're going to have to cover. And when they cover, they have to buy those borrowed shares back, and that exacerbates the upside. So right now, again, in a nutshell, expect some real volatility over the next few days and weeks. Understand that if we come all the way back down and test those December 24th lows, all else equal, that will just be a technical phenomenon. Nothing that us long-term, thoughtful, methodical investors would even lose any sleep over. I'll leave it there. Thank you as always for watching and listening, and I'll talk to you again very soon. Bye-bye.